Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is Friday, the 12th of October, 2007. The market's closed for the week, and the S&P 500 did bounce back a little bit here today. It was up 81 cents, or about 0.5%, and we had a very bullish week for the market. Yesterday we had a little bit of a fearful sell-off that came, I think, as a lack of demand for stocks as they are extended here, and it just kind of caught a lot of people off guard. But zero technical damage had been done to the market with that sell-off. It's holding nicely above these all-time highs here, and bullishly also above the rising 10, 20, and 50-day moving averages, with that 10-day moving average acting as support. The volume was a little bit lighter today, and that's the market's trying to stabilize a little bit in here. I still think it's possible that we're going to see a test of that 20-day moving average in the near term. And again, it might be just that the 20-day moving average catches up to the price action rather than the market pulling back down towards that. Again, there's always two ways that a market can correct, either price-wise as it pulls back to that level, or time-wise as it just kind of goes sideways and the 20-day moving average kind of catches up to it. Either way, we'll just continue to keep a focus on the key levels of support and resistance. And again, the most important level here near term is going to continue to be that 154.70. Let's just lower it down here to about 154.50 or so. Below that, again, we've got the about a 153 to 153.10 that should provide support as well. And the market did break this trend line. Now we see that level possibly acting as resistance in here a little bit. We've got the 5-day moving average is kind of flattened out, so I think it's time to take a little bit, just let your foot off the gas a little bit here. That's what the market is doing, and that you have to respond to what the market gives you each day. We do have support again right down here near this 154.50. That's going to be an important level next week. Breaking below that could lead to some further profit taking. But realistically, on the daily time frame, we've just still got a very good uptrend here. The weekly time frame, clearly it's extended. I think the best case would be a pullback, maybe even down towards 152. Just get a little bit of this excess speculation out of the market. And we saw, some of these Asian companies started to come in pretty aggressively this week. So that area had gotten just a little bit crazy on the upside, and I don't think the rally mode is over in the Chinese issues, but I think it's going to start to maybe be a little bit more selective going forward. So we'll keep an eye on that. My semiconductor data is all screwed up here. I don't know what it's showing up 41 cents, but here we've got this terrible looking candle, so I'm just going to skip over those today. The IWM Russell 2000 also managed to close above its 10-day moving average for the week, and had basically a pretty sideways market this week, as you can see that that's where it closed out last week, so maybe down slightly. But we're seeing the first signs of selling in here too after this recent large rally from these August, September lows down in here. We've had a very nice uptrend that is characterized by this rising trend line as well as the rising 10-day moving average. And looking again at that 30-minute time frame, you can see that trend line still in here. This is the main trend line. So that's going to be very important. This week's lows are, that is, at about 82.50. Next week, breaking below that 82.50, I think you're going to want to be a lot more cautious. We've got that 5-day moving average is now flattened out. So that suggests at least some sideways action here, possibly some more downward movement. So just you got to be a little bit more careful in here. This is where there has been selling in the past in this market, and that's really kind of what led to that to this sell-off here. Is it just kept hammering away or trying to get through that 85.40 level. If you go back and look at the archives and how many times we'd mentioned this level of resistance and how it kept bouncing away from that to the downside. So that's continuing to be a important level going forward for the Russell 2000. The 85.30, 85.40 level. And we're still a little bit of distance away from that. And again, it looks like just more, probably going to need some consolidation in here. This is that continuation of that uptrend on the 30-minute time frame. So you can connect them nicely from these September 28th lows as well. but just kind of neutral overall. The NASDAQ 100 did bounce back as well. Again, yesterday I said, you know, the market got extended. We got a one-day shock to the system kind of, and you know, the good stocks are going to bounce back the fastest, so that's what's good about this type of sell-off. It shows what stocks money is going back into the most quickly, and the ones that fail to bounce, those are the ones where there's issues, where people are saying, well, I've got to lighten my exposure to the market, so I'm going to do it in maybe some of these Chinese stocks that aren't bouncing back as they get a little bit overdone on the upside. But the market is bouncing back in here a little bit. It was up 82 cents, or about 1.6%. That's more than a little bit of a bounce, obviously. But holding still right above this rising 10-day moving average. Didn't even pierce through it intraday yesterday. On the 30-minute time frame, we've got just this real nice uptrend. Kind of broke through that support level yesterday, or through that trend line rather. But still looking good. The level I'd mentioned yesterday as well was based off this Fibonacci from the October lows. It came down to a 2/3 retracement level. So it came down hard, but it came down into an area where you might expect some support. So this is going to be an important level going forward next week, 52.50 or so. But this market bounced back very nicely. So we've still got a very solid uptrend. There's no evidence of any topping. But we did have our first one-day little shock to the system, and that gives you reason to just kind of be a little bit more cautious going forward.